All right, everything looking good. We are live. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:01 p.m. Eastern Standard Time on 12/21/2022, right about Christmas time. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so let's go ahead and jump right in. So we have seen over the last few days, obviously, a big situation with the Bank of Japan basically raising rates for the first time in, I don't even know how many years it is, but they're coming off of zero. But that's a big deal. That's a big deal. So seeing that big deal immediately caused a little bit of turbulence in the markets. And now we have seen TNX has jumped up and is just holding above the 8-21. So this is, so far, we don't want to get ahead of ourselves, but the exact scenario that we talked about, where you just come back down, retest the previous high of our peak before the retracement, and then we just come down here and we test that as support. So here we're testing it as support. We come down here, we hold at support, and then we come back through resistance. We put in a little W, double bottom pattern, and now we're back on top of the moving averages. So the momentum is in our favor. We have hard buy signal, left the bearish control zone. Stochs are powerfully angled to the upside. All green histograms approaching the zero line. The slope is still red, but we'll intersect that right around the time we intersect the zero line. And then obviously 200s are still powerfully angled to the upside. We have to watch. The 200 simple is starting to creep above a little bit here, saying we're losing some momentum. And then obviously now the 821 bear cross, we had a nice retracement, and now we're very close to a bull cross. So the real area to watch is just staying above 3.6. If we stay above 3.6, the 821 bull cross takes place, and then we're back off to the races. Everything will be bullish except for, around that time, we'll probably see the histograms approach the zero line and approach the slope line around the same time. And, if we do cross above them, that's likely the beginning of our next leg up. And then obviously we have our targets in place for the next leg. Using the Fibonacci extensions, we know we have the 1.236 up here at 5.3%. And then if we just look back historically, we know that is a very important level, obviously, as well, because that's our previous high that we're looking for, our previous target from back here in 2006. So we have taken out the most recent high, confirmed above that level. Very bullish. Broken out of our descending channel, or whatever you want to call it, this weird ass shape I have drawn in log scale. But I mean, it's been very technical, and it has acted perfectly since literally the 1980s. And all anybody is talking about is the 1980s. Well, this chart should be pretty important, I would think, then. So that being said, we took out our most recent high. The one after that is this 2006, 2007 level, the 1.236, and our 5% target from, literally this entire bull run. So now, what about the opposite scenario? What if this situation just fails, rolls over suddenly? Then the key level that needs to hold is the 200 exponential and the 200 simple down here at roughly like 2.8. So what could happen? What's like a hypothetical scenario? Let's say this already has topped out and it's done, and now it's going to come back down here and then find support on the 200s before going higher. It's going to look pretty bearish if we come back down to 2.6. Everybody's going to think, oh, that's it. The Fed's going to pivot. The market's pricing in already lower yields going into the future. The inflation's not going to last. Everything's fine. And there's definitely a possibility. There's a definite scenario where that happens. Matter of fact, if you want to think of the extreme opposite scenario of what we've been basically talking about on this channel, obviously we've been right. But, let's say there's a super bearish scenario and actually we go into like a horrible recession, depression, whatever. They turn the money printers back on. The dollar gets devalued. We print 50% more currency. We could come all the way back down here to like 1%. But the difference is, the zero is still the lowest low, basically. So if we come back down and just put in a higher low, that's not crazy. Again, that was like a random video we did a long time ago about compounding, I think it was. That's funny, they're still on there. So if we just put a fib down here at like, essentially the bottom, and let's just say, again, time traveler, crypto trend trader comes back from the future and says, hey, guess what? Yields topped. I wish I could give you more details, but I'm running out of time, but it's definitely the top. So fib that shit, and that was it. So this is what I would do. I'd draw a fib from the bottom to the top, quote unquote. And then I would just look for key retracements. And what do we see? The 236 and also the red 0.5 come in exactly at this level. And we see also, the 200 simple is going to keep kind of creeping along and slowly level out and then start to turn up as long as we're still above it. 200 exponential is probably going to kind of go sideways, whatever here. But if we just extended that out and looked at it, that's the 200 simple, the 0.5 in red. That was our all-time high to all-time low. And then we also have the 236, which would be the minimum retracement, for a completed 5-wave structure, which potentially, again, I don't want to get ahead of ourselves here, but potentially we've completed potentially a 5-wave structure. I know everybody is always super like polarized, and it's always, you're either a dollar bull or a dollar bear. Which one is it? Because otherwise I don't want to listen to anything you say. I'm like the one guy who just doesn't really give a shit. I don't give a shit about the asset. I don't give a shit about what chart we're looking at. What I care about is technical analysis. And arguably, 1 up, 2 retracement, higher low, 3 up, 4 retracement, higher than the top of the 1. So it follows all our rules. The 1 is shorter than the 3, which means the 3 is not the shortest wave. So the 5 can be any length, and it just so happens to be, what's referred to as a truncated 5th wave, or like an extra long extended 5th wave. So then we'll just extend out to the bottom right here, and we're just going to hypothetically, obviously you guys know we've done all this in the past, so we're not just getting like magically like lucky with different levels or anything. But the 2.618 was right here at 3.5, and that was obviously a big deal, and we came up slightly higher than that. So, what does this mean? Is it topped out? I mean, we don't know. You never actually know. But the truth is, there's quite a bit of key. I mean, okay, first off, the red box was our target from way back here when we were calling that the bottom was in, obviously. I mean, we went to 0. It was obvious the bottom was in. So it was very, very easy to be like, we're not going to go negative than 0, so I guess we're going to up. I mean, that was easy. Anybody could have done that. Somehow people couldn't figure out, but whatever. So anyway, 5 waves up here. That was our target the whole entire time. We hit our target. So it's not crazy to think, oh no, we overshot our target, but actually the dollar stopped. Maybe. I don't want people to think that I'm saying definitively it has stopped, because, this was our initial target up here. And then obviously our next target after that was the over 5%, and now everybody's talking about 5%. Doesn't seem that crazy. Well, now that everybody's talking about it, maybe we don't go to 5% right now. Maybe we do in the future, but maybe we got to have a little pullback. Maybe we got to do a little bit of that deep retrace. You know what I mean? So what if we get a scenario like this where we calm down? Let's say we don't even get back down to the 236 initially. Maybe we hit the 200 exponential and then we bounce up here. We throw a little lower high in the mix. Okay, trick people a little bit. Uh-oh, here's the downtrend. Daddy no like. ABC, we come down, retest the 0.5 in red, the 236 in blue. That's our macro minimum retracement. And then we get another shot at this, and maybe it goes back up to the upside. And if we look at the time frame on this, we can basically say, okay, from the bottom, come on, TradingView, get your shit out of my way. We go from the bottom to the top right there. It's roughly 1,000%. Who cares? But it's 945 days. So 945 days. Not quite 3 years, obviously, but I mean that was a pretty good run up there. Is that even right? 945 days? Dear God, time has flown these last couple of years. So anyway, 945 days, whatever. Let's say it takes 1/3 the amount of time to do the retracement. And that's not like exact science or anything like that. Maybe it takes half the time. So then from the top right here, roughly what, 1 year out we're looking for? So 365 is roughly October 2023. So maybe the dollar just gets wrecked until October 2023. And by wrecked, I mean just, retraces back down, or I'm sorry, TNX retraces back down to like 2.5 or something like that. I mean, and maybe I'm just being ambitious, and actually it's going to like legit have a retracement. Ooh. What if it's going to do something like this? Maybe it plays out over, even a longer period of time than that. Maybe it goes an extra year. Maybe it's not quite that long and it's something closer to this. I mean, there's still a lot of decent scenarios here where, this is literally 5 waves up, a retracement or give back. We can even do Charles Dow theory and go back half of the move. Charles Dow theory says, hey, after you have a big, wave or impulse or move to the upside, you get back half of that and then you keep going. And, that Dow guy, he's important. So, maybe we come back down here to 1.3 and that's our next bottom from the next set of, QE. So, I mean, I'm not trying to get like overly, I'm not trying to flip on everything right now. Definitely not trying to flip on everything right now. But everyone seems very, very convinced. And I know I do this all the time and most of the time I'm right. But everybody seems very, very convinced right now that they know exactly what's about to happen. When I look at these charts with no bias, which I know people can't do that because they get so used to saying the same shit over and over again, they're waiting for it to happen. They don't realize it's been happening. And now actually it might be done for now. But I mean, when this shit is green down here for a long time, we usually have a pretty nice move. Now we have a nice move to a lower high. That's fine. Eventually, double test that level again. And then we go to a slightly higher high. But I mean, when it's red, it's a good time to get out, or it's probably topping out, at least, short term. I mean, this indicator looks like, look, if you were going to look at any chart and look at, the jewel thief on it, I mean, this one pretty much tells the story because we're in a downtrend. So we should always respect the bullish control zone more as a selling area than the bearish control zone as a buying area, because we want to trade with the trend. So when we have, obviously, we sell off for a long time, we consistently put in lower highs. We want to be selling the rips, not buying the dips. If you buy the dip every time and you just hold, eventually it goes lower. So you don't want to buy the dips in a downtrend, which clearly this is a 40-year bear market. You do want to sell the rips in the downtrend. You want to buy the dips in the uptrend. You want to sell the rips in the downtrend. So clearly we've been in a massive downtrend for a long, long time. And clearly every time, I mean, some of the times, we went in the bearish control zone and then, immediately went lower. Sure, because the bears are in control. It's not a surprise. But when the bulls take over control, we know it's not likely to last. And that was these major market peaks right here. And now we're not technically, we have not, you guys know my criteria, okay, for the jewel thief. There's obviously, we want to see a spike top on the knife. That's ideal. We have that. So check 1. 2, we have the bearish control zone. When we exit the bearish control zone, which we're very, very close to doing, the bearish control zone is literally at 80 and we're there. And at the same time, let's just say this has any kind of like neutral or weakness whatsoever. This will cross and we will exit the bearish control zone and we will get the hard sell signal. Therefore, I mean, that's all 3 of our criteria for a monthly temporary top on yields. So, I mean, we're at like ridiculously high levels on the MACD. So it's not crazy to think that we could pull back, have a, 6, 9, 12, 24 months of red, maybe a little splash of green in there, but stop looking like a freaking Christmas tree. Doesn't have to happen. We don't need to have a pullback. We could get a minimum pullback and that was already it. And we're actually going to go higher. And realistically, when we zoom out on this thing and we said, oh, look, it looks like it could be this 1, 2, 3, 4, 5. Well, that's the thing about Elliott wave. Maybe it's really just 1 here, 2 there, 3 here, 4 here. And then we're getting ready to do that 5th wave up to the 1.236 and 5.3 or to the 786, the next key significant fib level. Any of those are viable, or either of those, I should say, are viable opportunities. I'm going to turn this one green for a second so we can refer to them. So maybe it's the green one, green scenario. Maybe it's our, blue scenario. A lot of it overlaps up to this level. The key is going to be, obviously, well, if it's going to be a 1, a 2, a 3, like the green scenario, when the 4 comes back down, the 4 cannot violate the 1 in green. So we can't go deeper, than basically 1.7. So the ABC scenario, Charles Dow theory, 0.5 retracement is not possible in that scenario. So there's lots of little clues along the way that we can use to figure out, hey, are we right about this? Hey, are we wrong about this? Obviously we look at the rules and we say, how big is the 1? It's 1.39. And then, obviously we know The 3 is already bigger than the 1. It's 3.2. So there's no minimum requirement for what the 5 could be or maximum requirement for what the 5 could be. So we could get, again, we talked about how this wave 5 could be a potential truncated wave 5. Maybe it's not. Maybe this is actually going to be, the wave 5. And really, we just put in a 1, a 2, a 3, a 4 is what we're in the process of doing. We only make it down to 200 exponential and simple, and then we go up for the 5. So either way, either one of those scenarios, which, there's endless more scenarios for sure, but either one of those scenarios results in us coming back down here to roughly around that previous high, the 200 exponential, the 200 simple, something along that level. So at this point in time, I'm not convinced one of these two scenarios happens necessarily, but that looks like the most likely set of scenarios for us. It looks pretty damn toppy right now. It's not crazy to think we're going to have continued weakness in the yields. Now, obviously, shorter time frames, it looks like it could go higher. We'll see. We don't know what's going to happen, but definitely worth paying attention to and considering that, hey, maybe we are about to come up here and we're going to put in a lower high, and then we're going to see that weakness and come down to the 200s, and then the longer time frame stuff, starts to look like a much deeper retrace. So worth paying attention to. And the opposite scenario is, we just rage right now and this thing just rips to the upside. In which case, obviously we want to pay attention to the DXY, because we know when the, tag team comes back again, it's going to be an ass whooping. So I just told you this whole scenario about how, TNX could be weak and we might see yields continue to drop and all that stuff. Well, we know DXY and TNX bullish at the same time is basically a wrecking ball for the markets. So let's look at DXY right now. So obviously this thing has been getting hammered. What does this exact scenario remind you of? What does this exact pattern, everything remind you of? I mean, this is textbook. We talked about it in this other asset, and we said, this is textbook. This is the most beautiful thing we like to see. With great confidence, we can say we know what's going to happen into the future. And by great confidence, I mean over 50%, 51%. That's great confidence. So massive move to the upside here. We put in a series of lower highs and lower lows, and then we eventually backtest the 200 moving averages. The 200 simple crosses above the 200 exponential. Typically, we get a push to the upside, a rejection, lower high somewhere up here, maybe just at the moving averages, depending how weak we are, and then we continue on lower for another leg down. That's one scenario. Now we're going to jump over really quick because I asked you, trivia question, obviously. So we're going to go look at everybody's favorite here real quick. Well, I mean, this looks super fucking familiar, right? Except for that part. U.S. oil on the daily, WTI crude prices. Nice little uptrend here, stays above the 200 exponential and simple moving averages, comes in here, puts in a top, puts in a lower high, lower lows, breaks down below the 200 exponential and simple moving averages, retests them regularly to try to get back above them, confirms into a bear market, consistently puts in lower lows. So again, I'm not saying these scenarios have to happen, but if there's one time when you start looking, hey, is now a good time to maybe be neutral or maybe, start thinking bearishly about something that's been bullish or bullishly about something that's been bearish, this is the time. This is the transition rather. It seems so obvious when we look back at a chart. And well, obviously the indicator makes it look obvious because that's why I made it for. So that literally anyone can look at this and be like, bull market, bear market, bull market. Hey, what's this? Ooh. That's my Neanderthal impression too, which means you don't need to be smart to be a trader. You just have to be able to look at a chart. And well, I guess if you're colorblind, it's going to be a little harder, but still. I mean, that's it, right? This is the area we're looking for. So if this is our, and you can always get a scenario like this where it's a fake out, a failed breakout, whatever. But then later on, you keep open mind, you have a higher low. And then what do you end up with? A W double bottom. And then next thing you know, you're breaking out. Then you're confirming bull markets, et cetera, et cetera, et cetera. So right here, worth paying attention to. But that being said, we know that we don't ever just go straight down on an asset, no matter what it is. So at any point in time, after coming down this much, now keep in mind, the dollar doesn't move in like massive percentages. But after coming down, 10% basically from the highs, it's not crazy to think this thing is going to have a decent pushback to the upside. And we haven't really talked about fibs from the top to the bottom because we haven't really seen any signs of a bottom yet. But now let's talk about the potential short-term scenario, same with TNX that we just talked about, where actually we have a low, a lower low, and then a lower low again 3 times in a row. And then we come down here to the TDMACD. We have a series of higher lows right here. Obviously, that is bullish divergence. We come to the jewel thief. We have a low, higher low, higher low, higher low, series of higher lows. Again, we have like, triple, arguably quadruple, if you count this little guy right in here, that little purple nurple. If you count that little guy, that's quadruple bullish divergence on the daily. What does that mean? We just go back into an uptrend? No, not necessarily, but it's not crazy to think that Chucky Dow, steps back in the ring, old Charles, and I'm not talking about Hoskinson. I'm talking about Charles Dow theory, a little bounce back to the 0.5. Maybe we front run at the 382. There's a whole cluster of resistance right there. Maybe we make it up to the 618. We backtest the breakdown, the lower highs. I don't know which one's going to happen, but I mean, it's not crazy to think that we're setting up for a scenario like that, especially as we're like squeezing into this little wedgie. Is the wedgie going to be enough to break us? Or is it going to be swirly time? I don't know. Do you know? Head in the toilet? Let's go. I mean, what's the breakout? We can only go so deep. The toilet's only so deep. Except for in that one crazy drug movie. I can't remember what that was called. With, I think it was Ewan McGregor in it. It was insane. But the guy, like, puts his head in the toilet and then ends up, like, it's like a whole world down there. Very, very strange. Also, guys, don't do drugs. I think that movie was about, like, heroin or something. Very, very crazy. That being said, he dropped the H-bomb. It's over. YouTube's like, you're back on the naughty list. Just in time for Christmas. Anyway, so not crazy to think we're going to get a little bounce out of here. So we'll see what happens. But, we're setting up for some potential counter trend moves, etc. But maybe this just gets rejected and then goes into a bear market. We don't know. We've had some pretty aggressive moves in some of this stuff. So the most important thing, though, is as we look across all these different assets, we see tons of things are confirming into bull markets, into bear markets, and vice versa. VIX still down here at the lows, retesting again. This thing is just absolutely beat down, confirming into a bear market. Indicator oscillators, moving averages, stuff like that, not quite as, well, I should say moving average, not quite as reliable on the VIX because it just oscillates in a range. So Dow Jones, obviously looking bullish. Bounce to 200s, as you would expect. They're both blue. You would expect now we just rip off to the races. Back to the highs. We left the bullish control zone, came all the way back down, touched the bearish control zone, bullish reset at the 200s. Look, we don't want to get too excited right now, but, on my checklist, on Crypto Trend Santa's checklist, okay, when I'm checking to see, has the Dow Jones been naughty or nice? It's checking a lot of nice boxes. And I mean, everybody gets a little naughty sometimes. Can't expect it to be perfect, but it's checking an awful lot of boxes. The indicator oscillator all the way back down, at the bottom of the range. Both stochastics down here. The knife is turning up. Could it be a fake out? Sure, of course it could. Bunch of red histograms in a row. Bearish divergence. Topping out. Back testing key moving averages. Blue slope line still, but we came all the way back down to 0. Now we're seeing one itty bitty little green histogram. Worth paying attention to. We're below the 8 and 21. They're bear cross. That's not good. But maybe the damage is already done. 200 exponential, flip blue. 200 simple, flip blue. We're above them. Guys, if we stay above 32,625, if we stay above 32,625 on the Dow Jones, I mean, we don't have to go to new all-time highs, but that's where we're going. Okay? You can get a ticket to the train, or you can watch from the sidelines, but I mean, there's nowhere left to go. There's nowhere else. I mean, it doesn't have to happen. Nothing has to happen. But remember, we talked about the inverted head and shoulders scenario. We talked about how if it puts in a weak ass right shoulder like this, it's extremely, extremely bullish. Okay, it doesn't have to, obviously. Could come all the way back down here. That's fine. We know the neckline. We know the target if we break out to the upside. We're above like almost all of the key resistance, building positive bullish momentum. I know people don't like to hear it, but guys, might be going to new all-time highs real soon. Real soon. So we'll see. I mean, there's a bunch of lines in the sand, And all this thing is doing is just, this could go sideways for the next 6 months. And the only thing it's going to do is just look more bullish. Now, that being said, what's wrong with everything else? And that to me is definitely a red flag. Don't get me wrong. But again, remember, we're playing the world's biggest game of investing musical chairs, okay? If we look at all these markets and we look at how many of them were putting in all-time highs, in the last 2 years, how many markets were putting in all-time highs? There was a time not that long ago where like 95% of assets were at all-time highs. So now we're looking at charts and we're seeing, hey, the Dow is almost at all-time highs right now, but there's also a shitload of other stuff, including indexes and individual stocks, cryptos, whatever, that are literally putting in like cycle lows right now. So the musical chairs aspect of it is essentially just like that bottleneck, in the markets, that funnel where it forces everything into like that small hole. And I mean, it doesn't force anything. Like, sure, you can go buy like some shitty stock that's getting absolutely wrecked right now with like horrible fundamentals that people are like talking mad trash about, and the woke army's coming after. Go ahead, whatever, buy whatever you want. But most people, especially momentum investors, look for where the other money is going. Look for the smart money's going, because there's something to it. If everybody's in an asset, it's more likely to continue going up. So the point about the Dow Jones and everything else looking like trash is the same way the energy trade looked amazing at the beginning of the year and everybody piled into it and it performed extremely well, unless you hodled it like a moron. You actually took profits, you crushed it. Obviously, congratulations to everybody on the channel for that was a beautiful trade. That being said, could the Dow Jones, could the industrial, could manufacturing, could healthcare, could all these big players in the Dow be where all the money's going right now for the big fat dividends, and just safety? I mean, if you ask me where do I want to have my money, and they're like, you want to be in a profitless tech company that's been around for 3 years and, some Silicon Valley startup or something like that? Or do you want to be in some manufacturer that has been making, paint and chemicals for the last 80 years that pays a, 3% dividend? I mean, are you serious? Are you serious? And you're like, well, there's an alternative now, obviously bonds, short term and stuff like that. But, even if you get the 3%, well, sure, but 3% dividend on the industrial stock or whatever, hypothetical situation we're talking about. And then also you get the speculative push to the upside. Maybe it goes to zero. I don't know. Anyway, to me, it's a big game of musical chairs right now. It's a big funnel, and everybody's funneling into the Dow and out of all these other BS indices and, individual stocks. So there's definitely a scenario where we're talking 1 year from now, right before Christmas 2023, okay, 1 year from now, and we're like, oh man, it was so crazy. I can't believe we nailed that Dow trade. This thing is just absolutely ripping up like 22%. Who'd have thought? And then still, like the S&P 500 or, the NASDAQ or the Russell have still not even put in new all-time highs yet. There is 100% a scenario where that could happen. Yes, train spotting, J-Hoff. You are the fucking man. What's up, Durwood? Good to see you, man. Appreciate that loud and clear. It would have been a damn shame if I was muted again. But anyway, absolutely. I mean, that's absolutely a possibility. And absolutely no one on planet Earth, I'm the only person ever that has ever even laid out that hypothetical scenario, okay? It's literally never been talked about in all the existence of planet Earth. No, I'm obviously, exaggerating. But why is nobody talking about the possibility where one of the major 4 indices just rips to the upside and the other, 3 just get hog-tied and dragged? I don't know. I mean, this still doesn't look good to me. The S&P does not look good to me right now. We basically just got rejected 200 exponential and simple. They're still bearish, and now we're retesting. Now, obviously, as long as we stay up above here and we have a higher low, then maybe we start building some strength and it starts looking good, a couple months from now. Maybe in March, we're back above here. Everything's looking good. It's starting to turn up. Sure. And then I'll say, oh, okay, here come the losers. you know, because we'll be looking at them from our fucking taillights because the Dow Jones is going to be ripping. I mean, if the pathetic ass SPY is going to look good. But here's what really concerns me. And I know I'm acting a fool today, but got to keep this fun, you know. SPY right here on the weekly, I mean, barely holding above the 200 exponential and simple. We had that bullish divergence. We shot up here, but we put in a lower high. And then we broke back down below the 8 and 21. So, I mean, there's still a lot of signs of bullishness here. You know, obviously we've been in a massive bull trend forever, though. So it's going to take time. Like, no matter how nasty this gets, it still takes time to develop. This is from 2012. So we've been in a Viagra-fueled bull market since 2012. Okay, just straight up, hard on. So we don't expect this to just immediately just go to zero, obviously. It's not a crypto. And I don't know, maybe Sam Bankman-Fried was in charge of the SPY. Maybe this is, but the S&P 500 is not going to go to zero. But I mean, it's not crazy. We got to really think about these hypotheticals. I mean, this still does not look good, honestly. And when we go out to the monthly, I mean, it looks terrible. You know, we basically, again, like going back here, you know, 2010 technically is when the 821 cross and we're above the 200s. 2010 till 2022. So for 12 years, we had a straight up, oh, the Fed, not Viagra. Sorry, that's other thing. The Fed fueled. We had a Federal Reserve central bank fueled rally is what it was. So 12 years of that, not the blue pill rally, okay? But now we broke down, confirmed the bear market on a monthly, you know, obviously 821 cross, back tested it and got rejected. And now we're 8 days and 20 hours and 13 minutes away. I exaggerated the 13 minutes part. I made that up. From a rejection and confirmation and a bearish engulfing candle that likely takes us back down to new lows. So the SPY just, I mean, looks like trash in comparison to the Dow Jones. Oh, you know, just for reference. Weekly Dow Jones bounced at 200 exponential and simple, 821 bull cross, still looking good. And monthly confirmed back above the 8 and 21. V bottomed, just like the hypothetical scenario we talked about with that soft pivot. I mean, anything from Jay Powell is, speaking of blue pills, his old ass is definitely propping up these markets. He's definitely the Viagra for the markets. He also works the other side, though. It's not one-sided. But I mean, let's be real here. We break above the 821, confirm back into the bull market, sell off, and start to bounce that. I mean, who knows what this is going to look like 8 days from now? We might, you know, this might close a green candle by the end of the year. Santa Claus rally, but only for the healthcare, industrials, you know, the long-term thick and nasties. I don't know. We'll see what happens. I just, you know, nobody's talking about the hypothetical scenario where like actually like all market don't go up simultaneously. Triple Qs looks absolutely terrible. You know, literally a few dollars away from the lows. NASDAQ getting beat down pretty bad here. Weekly, very, very weak, below the 200 exponential and simple. And just, I mean, looks like it's ready to just get wrecked. The bullish divergence was very weak on this too. And then obviously still below the 821 and bear cross. So looking nasty for that end of year. Everybody calling for the end of year rally? Too soon, Junior. Remember, I said it. I was like, I don't like this rally because it's happening too soon. If it would have waited like 2 more weeks or a month, would have looked way, way better. But instead, looks like a pathetic ass lower high rejection. Sorry. So sorry. Russell, you know, this thing looks absolutely disgusting. You know, obviously we bounced the key level we talked about right here over the last couple of days, but, you know, to what? To what? Lower high? Same low? A giant descending triangle after a leg down? I mean, so what does that really amount to? You know, well, really, I guess TradingView's like, we made these tools. They sent me an email the other day. They're like, use the fucking tools. That didn't really happen. You could imagine. Me and Miss, I can't remember, that Adam Sandler movie with Chris Farley in it. Billy Madison. Me and Miss Veronica Vaughn got it on. No, you didn't. Well, you could imagine. Anyway, ABC, I don't know, something like that. Doesn't seem too crazy now. You know, how big is that leg going to be? I mean, we don't know. Obviously, there's lots of targets here. This is still the exact hypothetical scenario that we've been talking about for months, even when we like still nail the little bounces. But this looks gross. I mean, there's a ton of support right here, but here's a perfect example of when one index looks like trash and another one doesn't. This was the Russell in 2018, and then this is the Russell in 2020. Oh, look, we didn't even put in a new high. What a pathetic trash market of pure garbage stocks. What a zombie index of garbage that no one wants. That's weird. Let's look at that S&P now, just for a reference point. 2018. Oh, okay. Oh, look, 2020. Oh, look what the non-zombie index did. It went another 15% higher while the trash Russell didn't even put in a new high. So, and again, I don't know why I'm the only person who talks about hypothetical scenarios where like one major index goes to a new high and another trash bag one doesn't. But it's worth paying attention to. So if you take one thing from today's stream, take that, you know, one of these things does not need to be like the others. Maybe it's already not. Maybe it won't be going into the future. Maybe I'll run the Dow just tops out and rolls over and the Russell just goes parabolic and meme stocks take over the world and AMC becomes a good company and Blockbuster comes back and dethrones Netflix and Elon stops being mean. All right. So XLE, I mean, looking a little double top Velopolis. Looking pretty weak up here. We'll see what happens. Obviously, oil not strong. Nat gas depends a lot on the winter too. But I mean, this thing looks ready to rip. Okay, look, we're not in like a strong bull market. I mean, it's still okay. 200 simples on top. Not great. Higher lows. Higher high, but so stuff could happen. But I mean, let's just look at, you know, right here. This thing went on a 20% rip from the hard buy. And then again, same exact thing right here. 20% rip from the hard buy. Ooh, isn't that weird? It's a 20% rip to the upside. I mean, so where does that put us this time? I don't know where we're going. I don't know. We might go to zero. Damn you, TradingView. They're like, you're not using the tools right. Shut up. You know there's a hotkey for that. So anyway, so XLE, I mean, maybe it goes on another 20% rip. Maybe it goes to zero tomorrow. I don't know. But let's at least consider the possibility that, you know, we have a little Fed party or whatever you want to call it. A little omnibus spending bill. 104? I don't think it's crazy, guys. I don't think it's crazy. And I feel like everybody, it's so weird because I always get these feelings at certain points in time where everybody thinks that everybody else is like, they think they're being a contrarian, but you're like, oh, but actually like everybody's trying to be a contrarian right now. So like, I'll actually take the opposite of the people taking the opposite. So I'll take the other side of like everybody's trade. Just call me the house. Okay. I mean, I don't know. We'll see. So we looked at the Dow, the dirty D, looked at all the dirs. Oh my gosh. Forever clicking on the wrong stuff. Okay, I don't know what the hell I did. All right, let's look at other stuff now. Okay, so Tesla. All right, so I want to talk about Tesla because obviously, you know, Kathy got in right here. We were talking about the potential bounce right here. It didn't quite work out, obviously. But I don't want to get bearish here now either. I know everybody all of a sudden hates Elon. Even the cult members. Some are leaving the cult. But we just hit the 382. And when we hit the 236, you know, obviously this is our macro, you know, Fibonacci. From the bottom to the top. Started from the bottom, now we hit 2019. That was at $12, you know, after the splits and all the stuff. And it went to 408, okay? So the 236, we came down to it. And from the 236, we bounced roughly 50%. A big 50. Shout out to my boy Charles. I'm not talking about you, Cardano. So, I mean, I don't know. We hit the 382 right here. I mean, do we have to bounce 50% exactly back to the 236? No, I mean, we don't have to. Maybe we just backtest the green 236, 28%. I don't know. Maybe we just backtest the breakdown from the channel, 20%. I like the setup. Could it just drop through here and just fall straight down? And then next thing you know, it's at 106 or 97. And you're like, oh, you're wrong about Tesla again. You just got stopped out. Okay, that's what risk management's all about, ladies and gentlemen. Now, granted, I don't like being on the same side of the trade as Kathy, and my nuts are still a little bit sore from the beatdown I gave myself, but, I mean, guys, it looks like potential setup, uno, dos, tres, same low right here, higher low right here, flipping the blue slope line over, all red histograms. Tesla's just getting beat down from every angle. The Tesla cult is even talking bad about it. They're like, oh, I'm thinking about selling my Tesla now. I don't even care about green energy because Elon's mean. That kind of makes me want to buy Tesla. Not just because they're dumbasses, but because, again, is that the contrarian trade? Now, I don't know, because Elon also is the biggest seller right now. But, I mean, we all know. Well, we'll see. I think I'm going to take another stab at it again. I think I'm going to take another stab at it. I mean, what is the next target is 23% down? I mean, we could run a pretty tight ship. No, that's not it. We could run a pretty tight stop and run something like, I mean, a 6% stop loss or something like that. We're literally at so much support. The bottom of our little mini itty bitty descending channel in white. We're at the 382 in blue. We're at this yellow box that magically showed up on our screen ahead of time. Is that from Crypto Trend Time Traveler? I don't know. Do you know? Yeah, I'm going to take another stab at it. See what happens. Let me clone this bad boy. And that's what risk management's all about. If we went all in on the last one, we might not get to play this time. And again, this could 100% for sure just completely get decimated. And we find out Elon's selling all the Tesla, okay? Or maybe he gets margin called and they just stop him out and they just sell his whole Tesla position. I don't know what's going to happen. But with a nice risk reward ratio, proper position size, could be a juicy setup. We shall see, though. Again, doesn't have to happen, but it's worth a shot. Microsoft hanging on to the 382 for now, backtesting the 200s. I do like when something hangs out at resistance or it hangs out at support because it's likely to break. So the more time we can hang out here and just go sideways, the better. Technically, we're under the moving average, but if you consolidate at it and just keep bumping your head on it, eventually you burst out. So I know we took profits already on the Microsoft trade and we're out like trout sitting back on the sidelines, but if we get back above the 821, we start banging our head on the 200s again. I mean, look, I will buy back in at a higher price with a higher probability of success. Cha-ching! Apple is next. So Apple, we got the breakdown from the bottom of the little triangle we were forming. Okay, we tested the top a couple times, couldn't get back above the 200s, tested the bottom, broke the bottom, back tested it. That also happens to be the 236 in red right here. Okay. It's not crazy to think we're about to get that leg down to about 116. I mean, you want to talk fundamentals, the stuff in China and the move and the Apple not looking so hot right now. We'll see what happens. Definitely possibility that we're about to get that big leg down here. And you guys know I'll be front running that take profit too, because I'm not greedy. So, I mean, it's been like 20 years since we opened that short. I couldn't take the chance muting it there, guys. Sorry about that. There's a 50% chance I would never unmute it. So Google, bouncing at 0.5, couldn't get back above the 382. As far as I'm concerned, while we're below the 382, and above the 0.5, we're just range bound. So I would just fully expect Google to just chop sideways. I mean, obviously, I love Google, and I'm just super glad that they provide this platform, and would never say anything bad about them. But also, it's probably just going to go sideways under the 200s and just continue to look like dog shit until it doesn't. Meta still looks pretty trashy. I mean, it's really just filled the gap and now it's hanging out here. But the truth is, this was our target in the yellow. Okay, that was the crypto time traveler target in yellow from like literally, way back months ago. And it was like, you're crazy. Meta will never be $100. You're dumb. And then, I mean, we kind of just hit it and then had that little capitulation move right there. This is, look, you guys know how I feel about Meta. Not a fan. Okay, if you're new here, I'm not a fan. Talk a lot of trash, but talk about trash about Meta even when it was in a bull market because it's just a trash company run by lizard people. Maybe, possibly. This breakdown right here, though, that's like a capitulation / like stop hunt like move. This is an aggressive, like ridiculous sell-off. 20 to 30% after just an absolute hammering. Doesn't mean anything. I mean, it did it once here before, but never filled the gap. I don't think we should rule out the possibility that really what happened here is Meta is our bitch, came down exactly to our target, and then actually, like, people just got scurred, and they paper hand Kevin'd their positions. Stop loss came down, and then it was like, oh, actually, like, kind of almost made it to the blue box. And now maybe we reclaim this level and then just rip. So I'm not going to lie. If we get back above our blue line here at like 125, I'm going to probably just take just a itty bitty little bullish position and see if this hypothetical trade setup that we had potentially talked about plays out. Maybe not, though. I don't know. Maybe Meta goes to zero. But who knows? I heard they're doing stuff in the digital world, okay? Amazon is next. Literally like putting in new lows in the last couple of days. Just a total beatdown. I mean, it's really just giving back this entire move right here. So, I have a feeling that the rest of the world, or at least some people, have looked into Amazon's financials and said, hey, actually, if it wasn't for them selling a bunch of a random car company stock that they just so happen to get at a substantially lower price, there would be literally zero chance that they would even turn a profit this year. And even after that whole scenario, which is, I mean, you're not cooking the books, technically. You're not breaking the law, technically. But it, makes things look a lot nicer. You know what I mean? Makes them look a lot better. It's like cologne. Doesn't make you any more attractive, but at least you smell nice. So, I mean, is it crazy to think that Amazon still misses numbers and ends up printing a negative year after this most ridiculous run of all time? Not crazy to think, guys. And if that is the case, there's probably going to be another leg down. But honestly, some of these things are pretty juicy at these super low levels. All right, so we're going to do some crypto and then call it a wrap. What do we got? 48 minutes? Okay. So Bitcoin on the daily. All right, so let's actually go down to the shorter time frames right now because we did a really long-term Bitcoin. Any of the videos, assets that we've done recently, like a long-term on, I'm not going to focus as much on long-term. Please just go watch those static videos. But short-term wise, we can talk about the developments, and then we have a solid base that everybody knows with hypothetical ups and downs, and then we can just talk about, how it develops. So we don't spend too much redundant time talking about long-term stuff that's not going to change month to month. But Bitcoin 4-hour is literally fighting right now for the 821 bull cross and to reclaim the 200 simple. If and when it does, the next target to upside is 17,170, which is only a couple bucks. And we've been going sideways for so long. Who even cares? Well, this is also the 236 from the top to the bottom right here. And, I don't know if these TradingView gremlins were in here on my chart again. You guys know I do not have top to bottom fibs in green. So I don't know what was going on that day. This damn chart gremlin's always effing with me. So anyway, we bounce to 0. We come back up to 236. We overshoot the 236 and test the 382. We overshoot the 382 and hit the 0.5 almost perfectly. And then we do 1 fib level down, 2 fib levels down. Now, I mean, the way I look at this, and again, you have to understand that I don't give a shit about whatever asset we're looking at. What I care about is technical analysis. And this doesn't have to be the scenario. We could easily break down here and come down lower. But this is what I'm looking at right now, guys. And it's not looking so bad. I mean, honestly, I'm a looking and I'm a liking. We got a low down here. We got a potential higher low. Obviously, if we take out this low, that matters. So we're going to just take a little horizontal ray tool. We're going to drop it in there. Okay, so if we take out this, we'll switch the color on that one. So if we take out this one to the downside, obviously, we would have taken out the ascending support. So we'll watch this, the 236, obviously, the ascending support next, the horizontal blue support next, the previous low right here next, and then obviously the lowest low ever. And you're like, well, that's a lot of stuff. Well, sure, it's like stairs. That's what we're looking at. But the fact of the matter is, right now, we're fighting to reclaim this level. If we reclaim this level, we're probably going to go back up and test the highs. And if we go back up to test the 0.5, you know, really, we're probably going to the 618. So then actually 19,000 starts looking more probable than not. Now we used a lot of energy to get up here. The histogram is above the slope line. It's at the 0 line. The slope line's still red, but it's close to flipping. So could this go either way right now? Sure. We could actually have a sell-off now, find support again, and then get the rip to the upside. And all this would look actually fine. But if we pop up here right now, start testing a 200 exponential, you know, maybe we get one of these type scenarios where we get a push up here, back test the breakdown from this channel. You know, so we put in a high, come back down, retrace, back test, and then go substantially lower from here. I don't know. There's basically a lot of like choose your own adventure type scenarios going on right now, and the market's got to choose, because we're not just gonna bet. If we want to bet, we'll go to the casino, obviously. All right, so sorry, got ahead of myself there. And that is the 4-hour chart. But I mean, realistically then, if that develops one way or the other, obviously, we get back above the 821. You know, it was a big deal losing that 821 cross, but we had a couple fights through here, and then we still had a nice little run. So eventually this thing, you know, it doesn't have to, okay? We don't ever have to touch the 200 exponential or simple moving average ever again, technically. But the longer you go without touching it, the more likely you are to touch it soon, if that makes sense. On a long enough time frame, the probability goes to 100. You either move towards the moving average or the moving average moves towards you. It's going to happen. So here we went 386 days without, touching it. Well, I don't know. Did we touch it? We were close a couple times. We got literally a couple dollars away, but we didn't technically touch it for a year. So that's a pretty decent amount of time to go by. So we know it happens, obviously. This was the last time we touched a 200 simple. So let's just say either one of them. And we haven't touched either one of them in 261 days. So is 100 days possible before we touch it again? Could it be 200? Could it be tomorrow? Sure. But I mean, we know it's gone a long time without touching it. And the market always likes to return to fair value just to make sure it's not overvalued or undervalued for too long. So if we start to develop, if we start to cross the 821 back to the upside, then maybe we threaten this previous high at 17.8. And if we do that, then we probably get a little further of a test somewhere up here in the 18-19 range. And then if we make it to 18-19 range, we probably finally test 20 and hit the 200 exponential and simple. So again, it's all about just building structure. If we just get one big candle up and touch the moving average, it's oh yeah, we did it, sure. But that's not structure. Structure is what gives market confidence. And confidence is what gives the market the ability to put more money in. And then that's how momentum builds. And then next thing you know, it's moonshot Lambos or whatever these kids are saying. Ethereum, obviously, touch the moving averages here. Well, at least the 200 simple. So we see obviously a lot more strength out of it. Has not taken out the low here. So it's actually looking a lot stronger. But the rest of the cryptos, total market cap on the weekly, again, just looks exactly like the Bitcoin chart. It's very, very weak, consistently putting in like lower lows and lower highs, and also like wasting all the momentum as it just goes lower. That's not good. It's not good. Bitcoin dominance on the weekly. So this is everything. We're back above the 821, looking pretty strong, trying to get across. So it means money is either coming out of altcoins or money is going into Bitcoin, or both those things are happening and the balance is shifting towards Bitcoin. Now, if we take out the stable coins, this is much of a stronger trend. And that's why we've been basically able to say, hey, Bitcoin is the place to be right now. The altcoins are probably going to continue melting down while Bitcoin gets kicked in the dick, but not quite as hard. Or maybe it gets kicked just as hard, but it doesn't spit up blood, or pee blood, whatever. So regardless, this is looking much, much better. The 821 bull cross already happened. We're coming back up here. Probably going to retest the breakdown, likely retest the highs. And then next thing you know what? A bunch of altcoins go out of business because the SEC sues them. Or I don't know what the fundamentals are. But maybe Bitcoin goes parabolic because I can't think of a reason right now. But there's got to be something out there. Not good with the fundamentals. Cheese not looking so hot, breaking down from the megaphone pattern. That's it. I mean, it had all the chance in the world. It was worth a little shot for the big time moonshot. But, technically, as long as it doesn't take out the low, there's still a chance. But it's not looking great right now for the old chili cheese dog. Solana looking terrible, like literally at the lows right here. Complete garbage. Chainlink at the lows right here. Complete garbage. I mean, I want to root for these things because they're in the bearish control zone, just beat down. And they look like they could pop soon. And you're going to be like, oh, man. It went up 21%. Like long term, though, they just look like complete garbage. Could it move 20% on some crazy news? Sure, anything could, especially in a crypto. In the cryptos. AVAX, literally the lowest low ever, like in the last couple of days. Complete trash. Polkadot, just, like at the lowest low ever, like right now as we speak. You're like, nope, now it's lower. Oh, now it's lower. The worst part is about being a Polkadot investor is every day is the worst day of your life. So what about today, Peter? Is today the worst day of your life? Yeah. Yeah, it is. That's fascinating. Let me know if anybody gets that movie reference. All right, so on to Matic, just about at the end, guys. On to Matic here, substantially off the lows, very, very strong. At our target right here for the potential scalp. So I'm not saying to do it. Obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research responsibly. Quoting movie lines, using swear words, talking about Viagra. If you listen to me, you're going to end up living in a van down by the river. Okay, so possibility 56% pump right here. 11% stop loss, 5-to-1 risk-reward ratio. If we lose a 200 simple, if we lose a 382, we don't want to be in this thing. It probably comes down to 236. Then we can talk about, maybe another trade setup from down there. If this one fails, if it succeeds, obviously we book our profits. Daddy gets a jet ski, and that's a wrap. XRP. So it's holding above this level for now. This is do or die for XRP. This has been literally the lifeline right here. This ascending green line and the 618. So if we lose the 618, you guys know the next target is down here. This red macro support at 25 cents or potentially 21 cents. XRP Army, don't at me. ADA, Cardano at the lowest low ever. If you got to pick a Chucky, you don't want this one. You want Charles Dow, not Charles Hushkin or whatever his name is. Hushkin. His last name's kind of like Worcestershire sauce. Hushkin. BNB, this is it. This is the linchpin of crypto right here, okay? It's holding the entire crypto market on its back. Had a pretty strong breakdown to backtest what was resistance. Resistance all through here. We get above it, support, parabolic, backtest to 0.5, almost to 618 on that wick as you put Sam Bankman-Fried in the grave. Not technically yet, but let's be real. He's at the same prison in the Bahamas where they got the Jeffy job done, if you know what I'm saying. So, You think Sammy is going to make it out of there? I think the odds are probably 50-50 right now. Okay. But I don't know how well he's going to do in prison anyway. So it might actually be legit if he, self-terminates. But also, I mean, still going to look suspect either way. But regardless, okay, I'm not saying he's only in danger in the Bahamas, but I mean, look, it doesn't look good for him. Anyway, that being said, high or low, technically, it's okay for now. If we lose this level, the 236, if we lose that blue support right there and we back test this, you know daddy's got an air pocket, if you know what I'm saying. And it's big. So is BNB setting up right now for the most epic bubble pop of all time? 82% drop? Maybe. All right, that's it. We made it to the end. That's all we're doing today. Appreciate everybody that tuned in today. J Hoff in the house. Talk about time flying. Office Space came out in 99. Yes, my man, J Hoff. I feel like we have the same taste. So that's awesome. Good call on that one, bro. But anyway, yeah, we're going to go ahead and wrap it up there. Appreciate everybody tuning in today. I'm going to see you guys, or you're going to hear me, whatever, on Christmas. We're going to do a little Christmas stream. Probably keep it short. Keep it a little festive. Maybe we'll throw back a little eggnog. Grab your favorite drink. A little something to put in the old Santa pipe. Maybe a cookie or two. And we'll have a good time for, I don't know, like an hour or so. So if you got to get away from the family a little bit, they're driving you crazy, we'll do a little streamy poo. But yeah, we're going to go ahead and wrap it up there. It is 9 p.m. Eastern Standard Time on 12/21/2022. And as always, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto Trend Trader. Appreciate you guys in the chat. Durwood, J Hoff, everybody. Merry Christmas and, happy holidays and New Year to everybody. I'll see you guys on the Friday stream. And then I'll see you guys on Sunday as well. All right. Crypto Trend Trader, and I'm out of here.